Good morning, traders. My name is Christopher Vecchio, currency strategist with Daily FX. Today is Monday, October 12th, 2015. These are your FX headlines as we turn the page to North America, and we're seeing a fairly quiet start to the week. It's a U.S. holiday today, so expecting that despite markets still being open, there's going to be a little bit less liquidity sloshing around out there, and therefore might see capped price action today during those U.S. hours. But for now, with European markets open, mostly running lower, you see that commodity prices are continuing to jump up. Crude is coming off of its highs of day, but we're seeing that gold and silver up around 1% each this morning. Right now, the tone and the mood around the dollar is still fairly negative. U.S. dollars declines while pretty much widespread are coming in largely against the commodity currencies. Aussie, Kiwi, and CAD continue to outperform. Right now, yen still isn't doing much. We'll take a look at that in a second. But to start, euro dollar here breaking out higher, 113.75 now. Still finding continuation after that triangle break from last week. Bit of a longer term basis here. Still have a triangle going back to the beginning of August. And right now we're looking for a test all the way up to perhaps as high as 114.65. In the 114 to 35, 114.65 region right now, indicators are firmly bullish and supporting a move higher in price. And you go up to the daily, and you see that they're starting to push higher from their bearish territory or corrective move recently, and now starting to point back into bullish territory. MACD is there, pointing higher and above the signal line, but stochastics trending higher, just not quite there yet. In the 40s still. But elsewhere, as we swing around these US dollar majors at the time being, Aussie dollar here finally breaking through that triangle and getting its continuation up, looking for a return to the base first and foremost, so ultimately a move into that 74.30, 74.40 area, and then perhaps as high as 75.80 in that zone where we had the former lows from March, April, and then into June form earlier this year. But right now, we've got to keep an eye on this triangle here, and Aussie dollar seems to be the guiding force that's pushing the pair up. Dollar yen, on the other hand, we're starting to squeeze outside of this triangle just as a function of time, but this triangle really isn't holding up. It looks more of coincidence at this point in time rather than a substantive bound that's constraining this market. What we're really seeing here is if price is starting to edge its way outside of this recent range, we really should perhaps be looking for more range-bound conditions that respect recent lows. When we do that, actually, you can see where we had the recent low from the 2nd of October fail to break the September low. So 118.60 seems to be the line in the sand for dollar yen to the downside. As long as that holds up, may find some support, continue to build going forward. Of course, in the world of rising equities, it's going to be difficult for dollar yen to slip anyhow, despite the near-term U.S. dollar influences here. We are still seeing that the indicators are pretty flat right now in stochastics. They're oscillating back and forth between really 60 and 40 the last few weeks. But MACD is just holding on top of that signal line, so not really offering much of consistent or strong signal for us to work with. In any case, though, dollar CAD continues its pullback. Oil firmer, but off of its highs this morning. The thing about dollar CAD is that the Canadian economy still is in a pretty poor position, and so as you see strong U.S. economic data come in, oil fallback, Canadian dollar is going to be very susceptible to decline. Among the commodity currencies, it's the least favorite one to play right now, given how weak it's been all year and how weak the prospects for the Canadian economy still are. With that said, when we look at where price is right now, we are coming into another significant support area, and we're starting to get up to the big one, the former yearly high. If we get down to 128.35, wouldn't be surprised if we see a little bit of a bigger stand there. We do have a pivot area if we want to adjust some of these markers down to that area to respect it. We can just take out these other guys here. You see that really it's 128.35 up to 128.65. All right, that defined the resistance that we had back in March, and then the recent pivot support we had at the end of July. And so if we can get down into there and hold it, there may be still the workings of perhaps a longer term move higher here. There'll be a very significant level of support. Certainly something to keep an eye on over the next few days. Unfortunately for markets, there's not a lot out today in terms of data. Nothing from the U.S. or Canada actually today. Do have two Fed speakers up. Fed's Lockhart is speaking up at 12:10 GMT, and Fed's Evans is speaking up at 14:30 GMT. Those two should be the biggest market movers on the day. All right, that's it for me today. I'll be back later on with another video. You can always find me in the Daily FX On Demand room from 6 to 7 Eastern, 10 to 11 GMT every day. You can also reach out to me through the Daily FX Real-Time Newsfeed, stocks, and Twitter at CVecchioFX, and you can email me cvecchio@dailyfx.com. If I don't speak to you before then, good luck trading the next few days.